Tuesday, May 5th, 2020, MONERO 64, home of alternative economics and contrarian views. Today I want to talk about why the globalists, central bankers, politicians, all these new world order types hate that you, the public, acquire gold or even think about acquiring gold. But at the same time, of course, you can bet that the very powerful have gold. And that's what I want to talk about today, why they don't want you to have gold and about all the propaganda that they come out with about gold and have personal experience of that, which I'll go through later on in the video. Before that, let's quickly look at the markets. Some of the headlines, things are getting quite interesting. I would also say that you should go to londonrio.tv. That's a website. And all you need to do to watch these interviews is sign on via email, with your email, email address. You can watch Brian Rose interviewing David Icke this past Sunday for 3 hours. I recommend that interview. Today at 3 p.m. London, Brian Rose is interviewing Bobby Kennedy Jr. on londonrio.tv. I'm planning to watch that. I spoke yesterday in my second video yesterday that my sister, who I didn't expect to watch David Icke, actually sent me the link to Sunday's interview. I knew the interview was going on Sunday, but I didn't watch it because I've known for many years about all this. But yeah, she sent it to me. And I watched it yesterday. It was really worthwhile watching. 3 hours. Yes, it's a long time, but sometimes you need to take the time to do that as well. So what about the headlines? Well, I see a headline here in the FT. Hedge funds bet on gold as refuge from unfettered currency printing. Big name investors such as Elliott and Caxton act on concerns over debasement of money. So the hedge funds are getting involved. Unfortunately, I think a lot of these hedge funds, they don't really buy real physical gold. Well, here's one of my mugs. Only physical gold and silver will slay the bullion banks. I think it's one of my favorites, David and Goliath. And I got at MONERO 64 on the back. Why don't the hedge funds and these speculators try to defeat the central bankers and buy the real physical? I was reading that they buy the ETFs and they do the futures on COMEX and the EFPs, but they don't really take physical delivery. And why is that? Well, because legally a lot of these hedge funds are not supposed to be involved in physical assets or commodity. They can do the paper game. So I think that's one of the reasons. And the other reason I think is, do they really want to challenge the central banks? Because it's the central banks that allows the speculators, the hedge funds, the stock jobbers, as they used to call it back in the day of the French Revolution, when you had the fiat money inflation in France. They were called stock jobbers. They benefit from all this mayhem, monetary mayhem. So they want to keep it going as well. But be as it may, I think it's a good sign that these guys are looking at gold like this, not just as a commodity. Other headlines that are interesting, because we've been told that there's not going to be any inflation because there's no demand, everything's shut down. But there's a warning here. VW warns of rising costs as car market faces deep recession. So what else? Let's have a look at Zero Hedge. Another interesting headline: beef prices explode to record high as more stores limit meat purchases. So no deflation there. So what about the markets? Well, the markets yesterday, the stock markets were down most of the day, a few hundred points, the Dow, and then magically they recovered. Are we out of the woods in the stock market? I don't think so. We're back up this morning. The Dow futures is up 250, just around 24,000. The shenanigans in the gold market and silver market is still ongoing. The paper market, I wouldn't worry. I would just try to keep stacking. If I'm in the fortunate position to have some kind of income and be able to have some kind of surplus at the end of the month, I would keep stacking. I wouldn't want to hold paper because we know where paper is going. It's going to zero. So be as it may, right now gold is at 16.95. It's down about 6. It's been as low as 16.88 and as high as 17.05. Silver having a tough time still, trading at 14.80, unchanged. High's been 14.88, low 14.71. S&P and NASDAQ futures are also up about 1%. The currencies are fairly steady. Sterling is up 0.1 at 124.56, 0.1%. The euro is down 0.2% at 108.86. And the dollar is unchanged against the yen at 106.73. Crude oils continue to rise here. Right now, oil is up 10% or $2 at 23.77 WTI. And we've seen bond yields actually rise quite a bit here. We're getting up towards 0.7, the 10-year yield. The 10-year yield right now is up 3.5 basis points at 0.67. Yeah, globalists. Why do they hate for you to have gold? The general public have gold because the central banks and the governments of the world, they hold around 33,000 tons of the stuff in reserves. If they didn't really like gold, they didn't think it was useful, they would have zero gold. Yeah, there's about almost 200,000 tons of gold in the world that's ever been mined above ground. So they hold about 15% of all the gold. So, and how can they control the price as they do with only 15%? Well, because it's very concentrated, their holdings, especially at the Bank of England, the New York Fed, some international institutions like the IMF, the BIS in Basel, they how can I say, orchestrate the manipulation. They've got a lot of firepower, and they have the bullion banks do the job for them. But there will be a point where they have to let the gold price go higher. The thing about having control of the gold market is also not losing the physical, you see. And if they leave the price down for too long, they're going to probably keep losing and losing supply. They're also going to have, as a percentage of the supply out there, they'll have less and less because more people are going to be buying it. So they have to also allow the price to go up, but not too quickly, because they don't want the public to be involved. Because what gold and silver to some extent as well do, well, to a big extent as well, if people hold precious metals, that means that they're saving money, that they're living within their means. They're not playing the debt game of taking out huge mortgages, of going on holidays 3-4 times a year and paying for it on their credit cards. They're not going to go buy an extra car and get car finance. They're going to be living within their means and trying to create a surplus at the end of every month and stack. And they hate that because, as David Icke said on Sunday, during that interview, the reason why they're shutting down the world economy for so long is that they want to kill off the small businesses, the mom and pop businesses, family businesses that have been around for over 100 years, like my sister's and brother-in-law's business in Switzerland, which I spoke about yesterday in my second video. If you haven't seen it, you can watch it. I'll put it up in the cards and below in the description. And why do they want to do that? Why do they want to kill the small business? Well, because small businesses, people know that economists know that it's the small businesses, the medium-sized businesses, like in Germany they call it the Mittelstand, that create real safe jobs. And they care about their employees. They're not big corporations who look at you as a human resource. They look at you as part of the family, and they don't want that. They want a world, as David Icke says, Hunger Games world, where there's a very few at the top to control everything, and everyone at the bottom is dependent on them. So yeah, that's why they hate gold and silver. They hate you to have gold and silver. And the propaganda, the price manipulation to scare people off is huge, and it's difficult to be a holder of precious metals unless you know all these things. And it was difficult for me in the beginning when I started buying a few gold coins. When I started stacking in '02, I soon realized that the market was manipulated. How did I realize that? Well, because I worked in the financial markets, even though gold or precious metals was not the market that I worked in. I started buying or stacking gold for myself. I used to work more in the bond markets, government bond markets, futures, interest rates. But watching the markets almost all day on the screen, I would follow everything, and I could see that we had some weird moves in the gold price that we didn't have in any other kinds of assets, especially not in the bond market and interest rate markets. So yeah, it was hard for me, and you can imagine the propaganda also kind of makes you wonder, am I doing the right thing? And I've spoken about this before, so the old viewers have seen this before. This is the story of when I was going to work back in April 2004. Used to get up really early to go work in the city. Got up at 5, got changed, used to take out Billy the First for a walk. Who's Billy the First? Well, he was the other Shih Tzu before this Billy. He used to love walking at 5:30 in the morning. So I used to walk Billy the First, have some breakfast or a coffee, and then walk to the station not far away from my house. And I used to take the 6:10 train to the city of London. Used to be at my desk before 7 a.m. And the markets really open around 7 in London. And I used to buy the FT to read on my journey to work. And I used to turn to the editorial page at first on the platform while waiting for the train. And I saw this article, Going Gold, the pointlessness of holding bullion continues to sink in. And yeah, so that was about 2 years after I started buying precious metals, looking at gold, looking at the monetary system. So luckily, I didn't fall for this trap, but I'm sure probably many people did at the time. I saw this and I said, well, what are they talking about? The FT. I thought to myself, they're supposed to be like a financial newspaper. They're supposed to know about these things. But I hadn't realized yet, to some extent, that there's an agenda there. But after reading this, I knew there was an agenda. So let's go through this so you can see what they're talking about gold here and the fact that they don't want you to be involved. So it says the pointlessness of holding bullion continues to sink in. The barbarous relic, as Keynes called it, is crumbling to dust. While Keynes called the gold standard a barbarous relic. Anyway, when even the venerable N.M. Rothschild has quit the gold market and the Bank of France, among the most stubborn of the official gold bugs, is thinking again about its bullion holdings, the end of gold as an investment has come a little close. So what happened to the Rothschilds? They just quit being a bullion dealer and being a bullion bank and part of the LBMA fix. But if you know a little bit about their history, they're the same people that tricked, and some people argue they didn't really do it, but the story is that they, I think it was Nathan Rothschild, during the Napoleonic Wars towards the end, at the Battle of Waterloo, he had a messenger over there who sent a pigeon over to London, and he knew before everyone that Wellington had beaten Napoleon. The next day, he went to the stock exchange in London, and he looked pretty glum and started selling gilts, and people thought that the British had lost, or Wellington had lost to Napoleon. He had actually won, of course, and there was panic. Everyone was selling, and then he started buying. So these are the same people. I wouldn't put it past the Rothschilds to probably have spoken to the FT editor about this. They don't want people involved in gold. This was, as you can see at the time, I even wrote it there, and I cut the editorial and I laminated it. The price of gold was at $400.65. So yeah, they didn't want you in this market. I mean, if you look at the history as well, I read a book about Florence, the Medici, and money at the time. The very wealthy in Florence didn't want the poor, the plebs, to have gold. They were only allowed to have silver. Not that silver is bad, but yeah, so you can see that things haven't changed, because gold is really the ultimate store of value. And they don't want you to have any. So let's continue. It will not be before time, the fetishization of shiny yellow metal, decades after it ceased to be used as an anchor of the international monetary system, is a lingering anomaly in modern financial markets. Perhaps Rothschild's last service to the bullion market could be to keep a live gold trader on display behind glass as a reminder of a bygone age, like the former coal miners who now make a living giving tours of defunct pits. The one advantage of gold as a reserve asset is that, unlike assets based on fiat money, governments cannot make it worthless by inflating it away. Well, they're doing that now, aren't they? The FT didn't realize that Ben Bernanke had made a speech warning people in 2002 that they were going to print as much as they wanted to, the helicopter speech, right? The FT doesn't talk about that. And they say, but in an era of low inflation, and given that independent inflation targeting central banks are the norm across the industrialized world, that risk has very sharply diminished. So the FT was completely wrong about everything, about gold, about independent central banks, and the fact that they were responsible. Look at the world now. It's completely reversed. And that's crazy, isn't it? That's why you should be very careful about what you hear in the mainstream. Let's continue. Indeed, for both private and official investors, gold is now a rather risky asset with a nil or low return. Well, government bonds have negative returns in real terms now. Gold, at least, you don't have to pay people to lend gold. You're actually still getting a lease rate. The intrinsic value of gold, determined by its use in various industrial processes, is well below its market price. While they don't understand that the attraction of gold is, the intrinsic value of gold is as a store of value, and that's why almost 90% of the people who have gold have it for that reason. So, and I don't think that's going to change, and it has been so for thousands of years, of course. Gold does not grow, so its value to any one investor as an asset is dependent on other investors also holding it as an investment asset. The gold price hangs precariously by its own bootstraps. Well, that's what Harry Dent has been saying also, that gold is going back to 700. Here's the FT at 400 saying it's overvalued. For private investors to hold gold on this basis is their own foolish affair. For central banks and governments to hold it as a reserve asset is a betrayal of the public on whose behalf they are acting. Well, I think the only governments that didn't betray the public were the Swiss government by selling half of Switzerland's gold, and Gordon Brown by selling half of the UK's gold. And yeah, very Gordon Brown did very well. He got rid of half the gold at the lowest price. It was called the Brown Bottom, below $300. Really good job, Gordon Brown. But then you look at who Gordon Brown is friends with, who are some of his advisors, like in private life. Well, he's a good friend of Evelyn de Rothschild. So there you go, giving him good advice. Despite recent sell-offs, governments and central banks still hold about a fifth of the world's bullion. Their large holdings relative to the size of the market by themselves make gold particularly ineffective as a reserve asset. The very act of official selling of bullion on any large scale to raise cash will itself drive down the price. So I think that proportion has gone down a little bit, as I said earlier. This danger was amply demonstrated by the UK's unhappy experience of trying to sell some of its gold holdings. Pre-announced, they say it's announced in 1999, but Gordon Brown pre-announced the sale. What does he expect the market to do? And why did he pre-announce? My theory is that he was actually trying to help the bullion banks at the time, and he was basically trying to drive down the price of gold so they could cover their shorts. That's what it was about. It wasn't an unhappy experience. He did his job well done. He did his job for the Rothschilds, who at the time were still in the market. So let's continue then. Announced in 1999 in the sensibly open and transparent fashion, the sales sparked such a fall in the global bullion price that a group of central banks signed a concord limiting such sales. That has recently been superseded by a new agreement for limited official sales. Well, that agreement was renewed every year. I think that's stopped now, but I don't think it's making any difference. I think central banks are still going to keep buying gold. The Russians, the Chinese have been buying gold. A lot of other countries have been buying gold. I know the Russians have stopped for now, but I'll come back to that in a minute. So let's finish this editorial. Given the pointlessness of holding gold, the speed of its official sell-off scarcely matters unless leaching the gold into the market bit by bit somehow maximizes the return to the public purse by limiting the impact on the price. That would imply some irrationality on the part of the market, but then holding gold is irrational in the first place. Perhaps the central banks are right to go slowly. Whatever the speed, the direction is clear. Gold is on its way out as an investment and as a reserve asset. 3 cheers for that. So there's the FT propaganda against gold. On this article here that I covered earlier about hedge funds getting involved in gold, there's a part here that talks about New Zealand. And it says, last month, Adrian Orr, governor of the Reserve Bank of New Zealand, said he was open-minded about buying debt directly from the government, a prospect that Diamond's Mr. Young described as appalling. The Bank of England has already agreed temporarily to finance the Treasury's extra spending needs, monetizing the debt directly. Well, I think they're doing that right now, even though they say they're not. All they're doing is the QE. They buy it from the secondary market. But the primary market knows that these central bankers are going to buy the debts that the countries are issuing. So they don't care. They even make a profit on it. And this is another comment here, which was really interesting, I thought, from Jerry Hallworth, Chief Executive of Hedge Funds 36 South Capital Advisors. This is what he said. I suspect we will begin to see central banks begin to doubt each other's creditworthiness and demand gold as payment instead of dollars or yen or euro or any other paper currency. He calls gold the credit default swap of central banks. There you go. FT. That's why they hold gold, and that's why you should hold gold and silver as well, of course. Billy's starting to, I think he's dreaming. If you enjoyed this video, please hit the like button, share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on all these other platforms here below. I wish you all a great day. Take care. Bye.